Hi, this is Mark with ValueCharts.com. We are looking at a continuous non-adjusted chart, a weekly chart here of U.S. sugar. I like to look at both non-adjusted charts and adjusted charts when I look at continuous contracts futures markets because they can give you a different look for a market. That's especially true for some of the commodities where you'll see a dramatic difference in some cases of what the market is doing, and especially when it comes to drawing trend lines and things like that, they can give you a dramatically different picture. So just understand, depending on whatever platform you use, understand that you can choose a non-adjusted, which means that the continuous contract is the gaps are not filled between contract months as they splice those together, versus the adjusted, you have the gaps that are filled in synthetically. You don't want to do any type of trading optimization or research on non-adjusted charts, but they can be helpful when trying to determine, apply technical analysis studies to a market. So just as an aside, that's what I'm looking at here. Now, one thing to notice here with U.S. sugar, we saw a yellow-tipped doji pattern last week. Now, I don't have candlesticks actually applied on this chart because the value bars indicator does not work with the graphics that TradeStation currently offers for candlesticks. And so what I'm doing is applying that to the open, high, low, close charts here, which is accurate with value bars. So the idea behind the yellow tip doji is you're using a combination of candlesticks, and I can just quickly pop that up there. So the candlestick pattern right here, which is not being displayed quite right, and I'm going to go back. I'll go back to the open, high, low, close bars there. But we do, with the open and the close being in proximity there, that is roughly a candlestick pattern. And then the lower yellow bar segment, notice that the top 60% of the price bar for last week is green, which communicates fair value. The bottom 30% or so is yellow, and that communicates that the market sugar traded down in the moderately undervalued valuation zone. So what happened was we opened in fair value, traded down into moderately undervalued, and traded up, and then closed in fair value. So the doji pattern with the yellow tip can be a bullish indication of what's happening or what's expected in the future. And then combining that with the slowing downside momentum, you can see by the MQ momentum histogram here that we have kind of a slowing histogram bars. They're decreasing here as time goes by, so the downward momentum in this market continues to weaken. Those combined could paint a picture for a meaningful bottom in place here for sugar, but we'll continue to watch this to see if that actually does transpire over time. We did take some trades last week right near the bottom of sugar. I took about 40 ticks profit to the upside. Some people actually in the trading room today with the help of Thomas Wood actually took their profits closer to 1900. So nicely done there. Extremely low risk trade when we initiated that. But I think that from a longer term perspective, we could see a lot more upside from here potentially. But as always, whenever we get into these type of moves, we're always looking to buy short-term undervalued or daily undervalued at a very minimum to protect as much as possible our downside risk exposure. That's all we have in this video. We're going to continue to watch sugar and see if we do actually get a bottoming here in the beginning of an uptrend. But right now, things look good to the upside so far. Thanks for watching.